Welcome back from the long weekend. We're going to help you get your head back in the game. Craig's Investment Partners Head of Private Wealth Research, Mark Lister, is with me to discuss the week that was and the week ahead in the markets. G'day, Mark.
G'day, how you going?
Good, thank you. So, the rebound across global share markets has continued. What's behind it?
We've had a nice little rebound. Obviously, the first few months of this year were very volatile, and we saw the US market actually go quite close to dipping into a bear market. In late May, it was closed down almost 19% from the early January highs. But we saw a strong turnaround in late May, and the last couple of weeks been pretty buoyant. So we've had a nice bounce there. The US market's now down sort of 12 or 13%. The NZX 50 about the same. It didn't fall quite as far as the US did. So its rebound hasn't been quite as strong, but they're both sort of sitting around 12 or 13% down from where they started the year. I don't think we really put that down to anything specific. I think, markets often, in a technical sense, maybe they just fall a little bit too far and then bargain hunters step in. People feel like there's a lot of negativity priced in, so you see a bit of buying support come through, and that's what we've seen. There's no guarantees that things are onwards and upwards from here. Was that the bottom, or is there another bottom still to come? I think it's still quite an uncertain outlook, so I wouldn't suggest that we're out of the woods just yet.
Okay, and specifically, we've had some company reporting over the past couple of weeks. Any surprises coming out of that for you?
Yeah, we've had some of the real heavyweights of the New Zealand market report results over the last few weeks. Ryman Healthcare, Fisher & Paykel Healthcare, Mainfreight, the three really high-profile ones. And kind of a mixed bag, to be honest. Fisher & Paykel Healthcare, a bit of a soft result, not as good as expectations, and that share price has continued to decline from the very high levels that it reached sort of, last year or a little further back. I think from here, things probably remain a little bit challenging for FPH. So I think the share price will either sort of muddle along or possibly even weaken a little bit further. Still lots of good things happening in a longer term perspective, but they just aren't in that sweet spot that they were in sort of back when COVID first hit. So that one probably a bit disappointing. Ryman, on the other hand, the other end of the spectrum, another company that's been under pressure, another one that's been in focus, and the share price has been lagging because of weakness in the housing market and so forth. Great result, very good result, very comforting. The Australian business going particularly well. So you've had one not so good, one very good, and Mainfreight. A bit of a mixed bag, to be honest, in Mainfreight. Some good things, some not so good things. Still a very good company, but it is a challenging outlook when you think about global supply chains, and obviously they're a very diversified business in Europe and other parts of the world. So that's sort of how it played out with those three heavyweights. One at that end of the spectrum, one at the other end, and one sort of middle of the road.
Mm-hmm. And in aggregate, business confidence across Australia and New Zealand is solid, but you think there might be some cracks appearing?
Yeah, I do. We look at the ANZ Business Outlook survey, which came out last week, and these were the numbers for May. They're not terrible. They're sort of below long-term sort of historical levels, but they're not sort of as bad as they were sort of a couple of years ago in the the height of the pandemic. But you are starting to see a few cracks appearing in terms of demand and sentiment, and that's natural. High cost of living, high inflation, rising interest rates. The residential construction sector looks particularly shaky. So some of the early sort of indicators in this survey from ANZ do point to building activity coming off potentially quite sharply over the next little while, whether that's weaker demand, whether it's shortages of materials, higher interest rates, all of the above. That was notable. So I think for the most part the economy is in decent shape, but it's definitely sort of a watch this space and something we need to keep a close eye on as the year progresses.
Politically, last week China was all over the news in terms of its sort of seeking deals with the Pacific. In terms of the economy there, are we seeing some stabilisation?
Look, hoping to. The Chinese economy has fallen into a bit of a slump in recent months, and a lot of that is of their own making. The zero COVID policy and the very, very harsh lockdowns in some of the major cities, Shanghai, Beijing. They really have just sort of switched the economy off in many ways. So we've seen all of the indicators just fall off a cliff. We're starting to see them stabilise. What we saw last week were some of the PMIs, which are essentially monthly activity indicators. And they told us that although in May, you've still got the manufacturing sector, the services sector, both contracting, the pace of that contraction is much less than we saw the previous month or the month before that. So we're crossing our fingers that some of the restrictions that we're seeing eased will allow China to sort of open up again in a staggered manner, and that will hopefully be a good thing for everyone, because China's obviously the world's second biggest economy. It's a big manufacturing base, and what happens in China sort of has wide-ranging impacts. So that's something we're hopeful of as well.
Speaking of big economies, we've got central bank meetings this week in Australia and Europe. What will you be looking for from those?
Yep, and both of these two central banks, you could say they're sort of behind the curve. The Reserve Bank here in New Zealand was the first mover last year with the interest rate hikes. The Bank of England didn't take too long to follow us, and the Federal Reserve has been moving quite quickly in the US too and playing catch up. But the RBA across the Tasman and the European Central Bank are sort of the two laggards. Now, the RBA has changed its tune and has now started hiking interest rates. So we saw one small interest rate hike a month ago. I think they'll move again this week. And it's really just whether they go the 25 basis points or something bigger. So that'll be interesting to watch this afternoon, actually. The ECB, I don't think they'll do anything this week. I think for them, it's probably the July meeting where they might make that first interest rate move. They've still got negative interest rates, actually, and they're still sort of embarking on sort of their asset purchases. So they need to get those things out of the way first. But big picture, the inflation issues that you're seeing in New Zealand and the US and the UK, Australia's got the same problem. Europe's got the same problem. So these central banks, even though they are a little bit behind, they need to get a move on and start normalising monetary policy to try and get that inflation under control.
Well, speaking of inflation, we'll see another data point out of the US with an inflation report this week. Do you think it's peaked?
Oh, look, I'm hopeful that it's peaked. This will be the headline CPI that we'll get out late in the week. And back in March, this hit 8.5%, which was the highest since 1981, more than 40 years ago. It did come down a little bit in April, came down to 8.3, and these numbers we'll get this week for May. It's expected to sort of drift a little bit lower, sort of 8.2. So I guess the good news is, 8.2 is lower than 8.5 2 months ago, and we've started to see it drift lower. So it's moderating, it's going in the right direction. The bad news is 8.2, or if we look at the core figures, which are expected to be about 6, they're still well above where the Federal Reserve wants them to be. They've got a target of 2. And look, any inflation measure you look at in the US, it's well above 2. So movement in the right direction, but certainly not fast enough movement or moderation to see the central banks sort of step back or pause. So I still think they will box on with more interest rate hikes to make sure that they get it under control. But look, we'll take any sort of positive signs we can at this point, won't we, given how worrying it is to see those inflation rates north of 8.
Great. Well, thanks very much for your views and have a great week.
Thank you.